What are the normal substance requirements that the tax office would look for before they issue that certificate of residence?
So this is actually an interesting one, because one of the easiest jobs we can be tasked with is actually getting a certificate of residence for an Irish company, because literally what it's a case of doing is logging onto the what we call the ROS account, the online services account, and clicking a button, and it comes through there and then. Now, what, like, obviously, just to maybe explain and to think this through a bit further, the substance really is of more relevance from the actual corporation tax calculation itself, and really to get the low corporate tax rate, that's where you need substance. The tax office in Ireland will actually give you the certificate of residence without doing any check or without asking any questions as such. And the reason for that is because it's an actual self-declaration process. So you actually self-declare that you are a resident. Now, every company, by virtue of its incorporation, is deemed to be tax resident in Ireland. And what can happen, sometimes people or companies, they want to cease to become Irish tax resident. And the way you have to do that is you have to actually make an election in another jurisdiction and actually be regarded as resident in that other jurisdiction before you can cease to be tax resident in Ireland. And that's by virtue of incorporation, you're automatically deemed resident in Ireland. As a final point to add to that, if it's a case that you have, let's sort of regard it as weak substance or little physical footprint on the ground in Ireland, and little or no management or control in here, the tax authorities can raise an intervention or an audit or a question mark over the corporate tax filings if the tax is declared at the trading rate. And we've seen it before, like where they've done this, where they will raise an assessment and assess that the profits are actually should be classed as foreign profits, because really there's no activity or there's no management or control on the ground in Ireland. And the difference between the two is foreign profits are actually taxable for corporation tax purposes at 25% and not 12.5%. So that's of much more relevance from a substance point of view than just obtaining the actual certificate of residence, which is quite an easy process. To do.
Okay, fantastic. Great to know.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.